Joining us now is Raghuram Rajan. He's the former governor of the Bank of India, also co-author of the new book, Breaking the Mold, India's Untraveled Path to Prosperity. Raghu, welcome. Thank you very much. It's a great read, by the way, for those who are now looking at India's outperformance and whether it can be sustained. Just the anecdotes and different examples, I think will give people a lot to think about. Before we dive into that, though, can you just address more broadly what you think the right move for the Fed is this year? Are you surprised by the fact they may not be cutting as quickly as we might have thought?
No, I like Steve's analogy. I think, we've had two up readings. It would be problematic for the Fed to cut after, a reading which looks in their favor. I think they are a little worried that we don't fully understand why inflation started perking up. They would have been even more worried if the news yesterday had been more inflation. I think for now, they think they have enough time. Policy is restrictive. You are seeing a gentle slowdown in the economy. Certainly at the margins, the labor market is slowing down a little bit, though, again, the recent numbers were a little rosy because March was very, very strong. And so I think put it all together, they're going to wait and watch. They're going to see, if they see successive months of disinflation, if they see housing inflation coming down finally, and if they see the services side sort of stabilizing and maybe coming to lower territory, I think they will feel they have enough room to cut, but that would take a few months rather than one.
I think that's absolutely correct. But as I listen to you talk about it, I think about the ticking time bomb in the background of the deficit, especially every passing month that rates are where they are, and they've been trying to deal with bills and other. And do you think we're somehow going to muddle our way through? And all of the alarmists talk about how we've never been in a position like this before, and no one seems to have any answers. I mean, is it all just going to blow over, and are we going to work our way out of it slowly but surely somehow?
You're talking about the fiscal deficit?
Yeah.
No, the Fed, that's not the Fed's job. If it starts worrying about the fiscal deficit, in addition to what it's already said about the market, I think it's going to have a real problem because then people are going to anticipate much more dovish policy. Already it has a problem with the market in the sense that financial conditions today are about as easy as they were when the Fed started raising interest rates, and we are 500 basis points up from then. So I think the Fed wants to focus solely on whether it's done the job on inflation, and if it starts talking about the deficit, I think that would be problematic for its overall message.
Steve,
but you're right. It is a problem. But it's not the Fed's problem.
I guess, Steve, the way that I'm thinking about this, and Bank of America had these great numbers that if we did 1.5 rate cuts this year, the Treasury would only be paying out, I think it's $1.2 trillion on interest this year. If we don't do that, it goes up to $1.6 trillion that they have to pay, and then that widens the deficit by another point. So I'm just thinking through that even if the Fed wants to be patient, some other officials might not be quite so patient.
No, you're right.
I would just add,
but I think.
Sorry, Steve, go ahead.
I was just going to add, you want the quick road, the express train to undermining the Federal Reserve's credibility is to take those kind of calculations into account. The Federal Reserve cannot do that. I don't think the market would buy it, by the way. I think the market would see right through it, which is why, getting back to what Raghuram was saying earlier, is that you've got to have the preconditions for the Federal Reserve to cut in the data. And that the count I gave you, the 2, 1, and 1, not enough, Kelly. So the Fed's going to wait for that. And if it does it before it seems like they have the preconditions for it, the market will look through it, and the Fed's credibility will be eroded. And I think it's fair to say that Powell, he covets the Fed's credibility. He understands the significance of it.
Right. But maybe, I don't know, that would bias them towards not. And let me, Raghu, ask you this about the situation in Japan right now. Is it some kind of preview? We've been asking for decades if Japan is where we are headed. First, when it was dealing with, look at quantitative easing, look at some of the issues that they've been having. Now they have a weakening currency, an economy. They're dealing with high inflation, obviously, through imports. Now, very different kind of problem, but the economy's in no better shape. And a lot of this has to do with kind of their stagnant debt situation. Is that some preview of a direction that we could be heading as well?
Well, I think you're right. The Bank of Japan wants to be very careful as it raises interest rates. It wants people to have enough time to absorb the rate increases. It also doesn't want to do it before it feels that it has finally conquered the disinflation problem. So for the Bank of Japan, yesterday was good news in the sense that if the Fed is going to be more accommodative over the future, over the medium term, it'll give the Bank of Japan a little more room to move interest rates up slowly rather than more abruptly, which is what would be forced given the depreciation in the currency. I think that is also, I mean, yes, again, they have at the really back of their mind the calculation that Japan has a huge debt outstanding, and they don't want to move it to high real interest rates before they actually have to. So they're going to be as patient as they can. But I think, again, the primary concern in their minds is to make sure that inflation is well established before they start raising rates more sharply.